Aloha, y'all. I'm Lahaina Lee, and this is your Maui Real Estate Advisor Year-End Statistical Report. Every year, when we sit down to do the year-end market report, I remind myself why this actually matters. These aren't just stats for the moment. These are the official numbers. They're what appraisers, attorneys, economists, buyers, sellers, and future policymakers are going to come back to and ask, what was actually really happening in Maui real estate in 2025? During the year, on the first of every month, we collect the data from the MLS, compile that, and that's what we use for our reports. We want to be out ahead of the market. This month, we waited for the official MLS data, and we're leaning on that. It's the most defensible snapshot we have. So with all that data, here's what we found. In 2025, the market didn't collapse, but it didn't cooperate either. Lawrence Yoon from the National Association of Realtors described the national market as stagnant, but not broken. That actually feels pretty accurate for our single-family homes here on Maui. The condo market, though, that one's a little more broken, a little confused, and definitely chaotic. And as the saying goes, confusion creates chaos, and chaos creates opportunity. Let's start with single-family homes. The single-family home market was a market that was split and kind of level. If you just glance at the year-end numbers for single-family homes, you might walk away thinking, well, that wasn't so bad. And in some ways, that's true. After a slight increase in sales in 2024, single-family home sales fell about 6% in 2025. Now, inventory grew only slightly, just over 1% year over year, which left us ending the year with about 6.75 months of inventory. You know, from a 30,000 foot level, that looks like a fairly balanced market. But that balance may not last. Pending sales, which are still our best leading indicator of future sales, dropped by just over 7%. So if supply stays roughly the same and demand continues to soften, that balance starts to tilt. At the same time, prices didn't really move and finished the year essentially flat. The median selling price finished the year at $1,295,000, down less than 0.5%. The average selling price ended just under $1.8 million, also down only about 0.5%. On paper, that looks pretty uneventful. But once you step inside the data, the story gets more interesting. For most of the year, the single-family home market on Maui wasn't just one market at all. We really have a number of micro markets all operating at the same time. Homes priced at or below the median, roughly that $1.3 million range, behaved very differently from everything above it. In central Maui especially, where there's more inventory in that price band, demand held up surprisingly well. In those neighborhoods, it often felt like a seller's market, or at least like a balanced one. Once you moved above that threshold, the tone changed. In West Maui, South Maui, Upcountry, and especially in the higher end and luxury segments, buyers had the leverage. Homes took longer to sell, negotiations were still the norm, and realistic pricing mattered. That split shows up clearly in the numbers. Days on market increased close to 10%, and sellers, on average, received about 96% of asking price. Now, that doesn't sound dramatic until you look behind the curtain. In many cases, buyers were negotiating roughly 4% off a list price that had already been reduced from the original asking price. That adjustment happened quietly, out of sight from the general public, but it happened. The median selling price really brings this into focus. For about 18 months, it hovered right around $1.3 million. That number became a psychological ceiling as well as a statistical one. In late summer, early fall, the median finally dipped below that level, briefly touching the low $1.1 million range before popping back above $1.3 million again in December. That December bounce doesn't necessarily signal a new upward trend. It may simply reflect the higher end sales we often see as we head into peak season. What does that tell us? It tells us this: the market is still searching for equilibrium, and it hasn't quite found it yet. But there is some good news. Affordability technically improved in 2025. The Housing Affordability Index rose modestly, which sounds good. But when the median home still costs around $1.3 million, affordability remains an unrealistic concept for many Maui families. And that's not new. What is new is the scale of intervention following the Kula and Lahaina fires. With the help of substantial federal funding, Maui County moved forward with an aggressive down payment assistance program. In some cases, the assistance offered, as high as $600,000, would have been unthinkable just a few years ago. For certain first-time homebuyers, this can be genuinely transformative, but it comes with strings. Those strings include deed restrictions designed to preserve affordability long-term. The intent is good. The trade-offs are significant. These restrictions limit resale options, cap appreciation, and make it difficult to build generational wealth through housing. For some buyers, that trade-off is absolutely worth it. For others, it's not. Either way, it's something that needs to be clearly understood before moving forward. Back to the numbers. By the end of the year, sales activity picked up somewhat. More homes sold in the second half of 2025 than in the first. Average prices climbed towards the $2 million mark as higher-end sales re-entered the mix. At the same time, pending sales softened again in December. That adds uncertainty heading into 2026. So where does that leave the single-family home market? Well, somewhere between stable and unsettled. Balanced on paper, segmented in reality, and highly dependent on price point and location. If single-family homes adjusted in 2025, condos did something very different. They kind of reset. Prices hit the wall, sales hit the wall, and for many owners, that came with real pain. When I say the condo market hit the wall, it's important to put that into context. That didn't just happen overnight. Kind of felt like it, but it didn't. The market has been skidding to a stop since 2023. That year ended with closed sales down more than 36%. We thought surely things can only get better from here, but in 2024, sales fell another 12%. And then in 2025, sales dropped again, another 18%. Over that period, the median condo price declined from roughly $832,000 in 2023 to about $693,000 in 2025. That's the backdrop for how this year played out. 2025 started with cautious optimism. January sales were modest. Spring looked like it might build momentum. Then summer hit and things stalled. By November, condo sales had fallen to their lowest monthly total of the year. December brought a rebound, the highest number of condo sales we had seen in about a year and a half. And on its own, that sounds encouraging. But when you zoom out, it's hard to ignore the weight of the existing inventory. Inventory climbed quickly early in the year, eased a bit, and then surged again towards the end. By December, we were back above 900 condos for sale. That translates into roughly 12 months of inventory. In any textbook, that is a buyer's market. And yet, buyers stayed cautious. Even as prices fell, and they fell hard, pending sales never surged the way you would expect. Throughout most of the year, condos under contract, pendings, hovered in a fairly narrow range. We ended the year with fewer pending sales than you'd normally expect to see heading into peak season. Pricing tells the most sobering part of the story. The median condo price started the year near $945,000, $945. By late spring, it dropped to the 700s. By midsummer, it was in the 600s. In November, it bottomed out at just under $600,000. December brought a small bounce, but make no mistake, that decline isn't theoretical. It represents real equity loss for real people. The average selling price followed a similar path. From well over $1.5 million early in the year, it fell into the mid 700s by November, $1.5 million to 750, before rebounding at the very end of the year as a handful of higher priced condos closed. Sellers on average received just under 95% of their asking price, but that number hides the reality that many condos had already been repriced once or multiple times before they sold. What we saw in 2025 wasn't panic selling. It was something more controlled but no less significant. It was a market accepting a new reality. It ain't 2022 anymore. Looking ahead, if there's one lesson 2025 delivered clearly, it's this. The Maui real estate market is no longer coasting. Buyers are careful. Sellers are being forced to price for the market we're in, not the post-COVID rebound market. Policy decisions, insurance costs, HOA costs, and financing constraints now play a key role in almost every transaction. Single-family homes found a fragile balance. Condos went through a reset that may not be fully finished yet. As we move into 2026, the real question isn't whether Maui real estate will recover. It's how uneven that recovery will be and who will be positioned to take advantage of it. Remember, chaos creates opportunity. The people who understand what actually happened in 2025, not just the headlines, but the details, will be the ones best prepared for what comes next. And that's exactly why we do this report every year. Mahalo for tuning in. If you have comments or questions, drop them below or shoot an email to lee@alohapots.com. I answer every one. And if you like this episode, give us a like and maybe send it on to someone you know who's thinking about Maui. And if you haven't already, subscribe to make sure you don't miss anything. Oh, and if you know someone who is thinking about buying, selling, or just keeping track of real estate on Maui, we've got a fabulous team of seasoned, well-trained agents standing by to help you out. That's all for now. So, from the greatest island on earth, this is Lahaina Lee saying aloha. Tony Brown produced this podcast. The information provided in this podcast is for educational and informational purposes only. It's not intended as a recommendation to invest in real estate or any other financial asset. We are not financial planners, certified public accountants, or attorneys. You should consult with a qualified professional before making any financial, legal, or investment decisions. All investments carry risk, and past performance is not indicative of future results.